Mr. Jay Dardenne is the commissioner of administration for the state of Louisiana. Mr. Jay, oh my gosh, it's been almost 2 weeks. Welcome back to KEEL.
Robert, good morning. I don't know what we were going to do, not speaking to each other for a while.
I know there was a gap in my life. Let's try to fill it now. The state of Louisiana, according to Moody's Investor Services, our credit rating, well, let's start there, because I read a lot of articles on this last night, and it's referred to as the bond outlook, the credit outlook, the bond rating, and or the credit rating has been upgraded from negative to stable. A, which of those is it? And B, why is that important to the state?
It is the outlook. It's not the bond rating itself. The bond rating itself will remain the same, but the outlook has moved from negative to stable, which is a very good first step for the state. I mean, this is a very quick recognition by Moody's, and hopefully this will follow with Fitch's and Standard & Poor's, the other two rating agencies, who recognize now that we have a sense of stability in state financing with this passage of the sales tax for 7 years, and that's a good first step. We hope it will be followed at some point down the line with a credit rating improvement, which will help our ability to sell bonds and affect our interest rates in a very positive way.
What is the criterion that they base that rating on, and does it change from year to year, and what did we meet that previously we haven't?
Well, it doesn't change on a set time. It basically, they react when they see something happening in the marketplace or something happening in the economy or something happening with your tax situation. So when we created this cliff and have been staring at this cliff for 27 months, they moved us to a negative watch, meaning they were concerned about our long-term financial stability. That's now changed, and as I say, I think the next step will be for us to convince them that we're due for a credit upgrade, and it's not on any particular time frame. It's based upon their analysis of where we are and what the state's economy looks like, and I think it will be a combination of a stable budget outlook, good financial management, not using one-time money to balance the budget that had been done in the past, as well as their assessment of the state's economy, which is still driven, as we all know, by the oil and gas sector. So as they see that improving, I think that'll enhance our chances to get an upgrade in our bond rating.
If the state of Louisiana is mandated by the Constitution to have a balanced budget, i.e. we can't spend more than is allocated by the legislature, and if that's the case, and then how is spending more this year, because our general fund budget has increased, how does that affect the way they look at Louisiana's potential credit or Louisiana's potential credit rating?
I don't think it really has a major impact on that. They're quick to tell you that they're not necessarily looking at how you spend your money or what you spend it on. Obviously, the fact that we have a balanced budget is a very good thing and a positive as they evaluate Louisiana's financial situation. But they recognize that we have some very good fiscal management tools in place, like a constitutionally required balanced budget, like a mandate that we pay our creditors first, like the fact that we have a revenue estimating conference. There are a lot of things that we've done that give us a lot of credibility with bond rating agencies, but what didn't give us credibility was our lurching from year to year or every couple of years with these temporary taxes that created a great deal of uncertainty. And that primarily is what prompted them to move us to a negative watch, along with the fact that the oil and gas sector declined.
In other words, basically, it's the fact that it's a 7-year tax that makes them feel better about Louisiana. Is that what you're telling me?
That's right. From a stability standpoint, I mean, it'd be much better if we didn't have another cliff created 7 years down the road. But because of the fact that it's so far in the future, it gives them a sense of stability, like we have a sense of stability now that we think we're not going to be changing everything year after year after year. We now have this in place for 7 years. Yes, the legislature could change it or do something differently whenever it decides it wants to, but at least this creates a level of stability we've been talking about was needed, and they've now very quickly recognized has occurred.
I'm looking at the list of general obligation bonds over the last few years that Louisiana has issued, and I'm looking at some of the things we're borrowing or issuing bonds for: in education and environment, health and hospitals, transportation, utilities, $37 million in bonds for quality of life. Do we need to borrow all this money when the general fund budget is nearly $10 billion?
Well, the general fund budget pays for the operating expense of government. The borrowing is for capital projects that are not built into the operating budget. So in other words, you borrow money in order to build things or improve roads or do major capital investments in Louisiana. It has nothing to do specifically with the operating budget, except that you have to appropriate money in the operating budget to pay that debt every year. And that's one of the mandated expenditures that we have year after year after year to pay our bonded indebtedness. But it's two entirely different purposes. One, to operate government, and two, to build and make structural improvements in roads, highways, schools, not so much schools, state buildings and higher education, things that the state is responsible for.
What is quality of life? It's $37.7 million in bonds for quality of life. What is that?
I'm not sure exactly what falls under the category of quality of life, but my sense would be those are projects that are approved by the Bond Commission and by the legislature for non-governmental expenditures. We have non-governmental organizations that provide government services or have a connection to what government does, and they are allowed to borrow money, and the state is responsible for building those particular projects. And those probably fall under that category. I'm not sure what you're looking at as to how you characterized what all these are, but that's probably the non-governmental organizations probably are the ones that fall into that category.
We were previously categorized as negative. We are now stable. I don't know much about this, but is there something, is there a category below negative, or is negative as low as you can get?
I think negative is probably as low as you can get. I don't know of anything below negative other than giving you a downgrade in your bond rating. Because remember, this is just for the outlook. This is the overall assessment of how it looks down the road. The bond rating is the assignment that is given to the state that tells potential investors this is how we grade the level of risk that you have in investing in the state. And we had a downgrade previously. We will not have one now as a result of this, and hopefully the only way for us to move now is to improve that bond rating, and that's what we'll be going for. We'll be meeting with these rating agencies over the course of the next several months to try and convince them it's time and appropriate for Louisiana to get an improved bond rating, which will help us financially because it'll better our interest rate.
And yeah, I was just going to talk about that. The fact that we are now stable. In the long run, A, what's better than stable? And B, because we get a lower interest rate, how much money will this save the citizens of Louisiana?
Well, it depends. I can't give you a specific number. It's significant. It's not a monstrous number, but it's significant because it just bears on the amount of interest that you're paying year after year. I'm not sure if there's another level above stable that they do by way of an outlook. I'm assuming there's something that says a positive outlook or something that looks really good down the road. But we're going to use this improvement for negative to stable as a springboard to hopefully convince all three of these agencies that it's time to upgrade Louisiana's bond rating.